What is going on, investors? Hopefully you guys are having a great day out there. Probably a little bit better if you don't own any rocket company, ticker symbol RKT. That is because in the after hours, the stock is down $3, over $3. It's about 13.8% at the current time. Year to date, the stock's up 11%, but it did have this big old pop that was like Wall Street Bets kind of euphoria. This name kind of got wrapped up into that and did have a nice little pop, probably because there is some short interest on this one at about 8% at the current time. We're going to talk broadly. Is this a buy the dip opportunity? When we get over to the stock chart, we'll look at it from a technical perspective. Is this a spot where you can come in here and buy Rocket Mortgage on the dip? Look, this thing's trading down at 20 bucks. It was as high as $23, $24 recently, and it was as high as, almost $40 at the height of kind of the Wall Street Bets euphoria. Again, that only lasted for a day or two. Now, we will look at the numbers, and I don't want to say the numbers are somewhat irrelevant with this company. They certainly do make a lot of sense to look at this, but we'll probably focus them, honestly, on them a little bit less in this video than we do normally in our other videos. And I think it will make sense as I walk you through this. So Rocket Mortgage is sinking in the after hours. Q1 earnings slipped from a strong Q4. Here's the deal. Q1 adjusted EPS, that's the most recent quarter, came in at 89 cents. 90 cents was the consensus. A 1 cent miss is nobody's going to care. But here's the deal. In Q4, just the previous quarter, they were at $1.14. So we went from $1.14 down to 89 cents. So what's driving that? Okay, we've got our closed loan origination, which is one of the bigger businesses at Rocket Mortgages. Okay, it came in at $103.5 billion. They closed that many loans. Now, unfortunately, in Q4, they closed 107.2 billion. So we went from 107.2 down to 103. Guess where they're going to be in Q2? Down between 82 and 87. That is a massive drop. What's that, like 20%? Maybe even a little bit more than that. That is a big, gigantic drop in closed loan origination. That is what is having investors very, very concerned about the future of this stock, at least in the near term. Now, net rate lock volume, say that a few times fast, went from 95.1 billion. In the previous quarter, it was at 96. So we went from 96 down to 95. Not that big of a deal, right? Okay, but take a look at Q2 where it's going to come in. 88 to 81. And so we're seeing a massive decline in Rocket Mortgage's business. You might be asking yourself, well, what the heck is going on? Well, if you haven't taken a look at the housing market, the biggest issue is there is just not a lot of inventory out there. If you're trying to buy a house, you're probably competing with multiple bidders, it's very, very difficult because the amount of houses for sale, just anecdotally, I live in California. There's always homes for sale. Look, but there are like nothing. It used to be when you drove around town, seeing a for sale sign was not a big deal. Now it's like when you see one, it is like, oh my gosh, that house is actually for sale. There is like no inventory on the market. And this is virtually nationwide. And so you have low inventory. That is not allowing Rocket Mortgage, it appears, to close on these loan originations, okay? Because they need people to buy houses. And if there's no houses for sale or much lower inventory than what we expect as consumers, well, that is going to hurt loan origination, and we're seeing that show up in the numbers. The other thing that we're seeing is rising interest rates. So the housing market has kind of a double whammy. You've got record high prices that are probably keeping some buyers on the sidelines. You have a record low inventory, which is keeping people that want to buy a house from not being able to. And on top of that, we're starting to see interest rates rise, which also has a strong correlation with people not wanting to borrow money, because as interest rates rise, it obviously becomes more expensive to do so. All things being considered, the headwinds in Rocket Mortgage's business, not good. Now, let's just take a broad look at the numbers. So We've got we've got total revenue here. They have lots of different kind of revenue streams. It's an interesting business. You can look at one of my other videos if you want to see a little bit more detail, but we've got total revenues. Look, came in really strong here, $4.6 billion. We were at 1.3 in the previous year. I mean, explosive growth, right? We've got our expenses here, total expenses coming in at 1.7. That means that gives us income before income taxes, 4.5 minus 1.7 gives us really strong $2.8 billion worth of profits to play with. This is a company that is extraordinarily strong, is earning money from an earnings per share basis, and has a market leadership. So I like those things. Like this stock from a fundamental perspective. I like this stock from a numbers perspective. The problem is the market that they are in absolutely stinks right now. It's just a terrible, terrible market because originations have completely dried up. Now, speaking of drying up, demand for the stock has dried up a little bit. After releasing that guidance, people are saying, wow, this stock is going to go back to numbers that we haven't seen in several years, as the housing market doesn't appear to have any signs of turning around, at least in terms of increasing volumes and potentially lower interest rates, at least in the shorter term. Longer term, those trends could reverse, and that could make Rocket Mortgage a very, very, very well-performing stocks, but you have to bet on those trends eventually reversing. Now, from a stock chart perspective, I am loving what I'm seeing here. It's really hard not to open up the app, Robinhood or something like that, or your E-Trade account or your Schwab account, and want to put in an order. Now, it is in the after-hours session, but tomorrow, this stock has pulled back to a level where it loves to hang out. Right here at right about $20 per share, 19 and change, is a natural level of support. In fact, this moving average has just kind of hovered there. And I showed you, this was actually on a previous video, I drew these trend lines in. This stock liked to bounce down here, 17, 18 bucks, pop up, go down, pop up, go down, pop up. We had this big pop up that was, that was like Robinhood, Wall Street Bets type thing. And then we pulled all the way down. $20 level. I do not blame you if technically you like this level, okay? Because this is a natural spot. This is about where the shares IPO'd at. So you're actually getting this stock for, in my opinion, a pretty decent stock price. The only issue is you have incredibly low inventory, you have rising interest rates, and you have guidance that's coming in way under what they've done over the last couple quarters. If that type of trend continues, well, look, this stock could continue to go down as its business starts to dry up. We'll see what happens with Rocket Mortgage. This is one of those weird situations. Fundamentally, I like the stock. From a marketing perspective, from a market leadership perspective, I like the stock. From a technical perspective, where the stock is sitting at is very nice. I like all of that adds up. But unfortunately, the housing market is just a complete disaster right now if you are in loan origination, which Rocket Mortgage is unfortunately in. And not only that, they're in the refi market as well. And as you have rates going up, people will refi even less on their homes as well. So hopefully you enjoyed this video. Leave me a comment down below what you think about this one. We'll be back again with more videos again soon. Good luck with your investments.